This is Alan Bush with the daily financial forecast for Tuesday, December 27th. Starting out with the stock index futures in the overnight trade, we did see some strength. This due to rising commodity prices. Also, we did have some better economic news out of China in the form of increasing corporate profits. But there was an additional boost more recently with the consumer confidence number coming in substantially better than the estimate. So currently stock indices trading at daily highs. Longer term, we feel that the indices will continue to advance well into next year as the U.S. economy, in our opinion, continues to expand, and we think that it will expand at an accelerated rate and at a rate that is above the consensus view. Moving over to the currencies, seeing the dollar index a little bit better in the overnight trade as interest rates in the U.S. start to increase with treasuries lower and the actual interest rates higher. So that's supportive earlier, but an additional boost to the dollar index with the consumer confidence number coming in, as we said, quite a bit better than expected. So the dollar index now trading at daily highs. Some pressure in the yen after employment numbers in Japan coming in a bit on the negative side. So unemployment increasing to 3.1% from the estimate of 3%. Longer term, we feel that the dollar index will continue to advance, even though we believe that the Fed will only raise rates 1 or 2 times next year, while the Fed is predicting 3 rate increases and 1 major bank indicating 4 rate increases. In any event, higher rates from the Fed will support the dollar index well into next year's trade. Now, moving over to the interest rate futures markets, pressure developing as stock index futures advancing, crude oil prices higher, other industrial commodities trading higher, all of which are negatives for the interest rate futures market, especially the long end of the 30-year bonds. But more pressure coming in more recently with that consumer confidence number coming in as strong as it did. Longer term, we feel that it's the long end of the curve that will suffer the most, which it normally does when inflation is on the increase. And we do believe that commodity inflation is going to accelerate next year. And we do believe that wage inflation will become more of an issue, which is not talked about much currently. So inflation is coming back. We think that inflation will accelerate at a greater than consensus estimate, all of which remains bearish for the interest rate futures markets, especially the 30-year bonds. So continue to trade the interest rate markets from the short side. This is a trend that will probably last well into next year. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.